Hey everybody, Economic Ninja here. I hope you're doing great. I'm doing great. We're going to talk about real estate. We're going to talk about forbearance and the upcoming real estate crash. Now, you guys know that I've been talking about a real estate market collapse since this last summer, and this time is no different. The reason why is because people look at what's right in front of them and they don't know what's going on behind the scenes when it comes to a real estate crash. A little bit of background, guys. I've been investing in real estate since 2001. I became an accredited investor when I was 24 years old, got out of the market around 2006, 2007. I was completely out, getting ready for the crash, because the crash actually happened in 2006. Okay, so we're going to be talking about forbearance. And even when I called the top of the market, it was because I said we are going to see an increase in inventory coming into the fall, which we have. My hometown, we saw inventory increase 200 to 300%, but that wasn't enough. There's still a lot of buyers out there, and there's a lot of fearful buyers because of mortgage rates. So let's talk about forbearance. So I got some notes as always, so here we go. All right, so a couple things. Fewer loans in forbearance means more inventory is coming in the horizon. Now, we all know, guys, that the forbearance ended. The programs ended January 1st, which means that we're going to start seeing banks be able to start moving towards foreclosure, okay? Now, first off, let me explain what forbearance is. Under forbearance program, the servicer temporarily forgoes their right to call a loan due and to start pursuing foreclosure processes, okay? In 2020 and 2021, we saw an increase of owners on these programs and record low inventory, okay? Nobody wanted to move, people didn't have work, everything was at a standstill, right? But we started to see inventory as it collapsed. The few buyers that were out there were just hard charging and bidding up homes. Now, the story of me selling my house when I got out of real estate in 2007 was a very interesting one. I had one of my last flip properties with a friend and coworker of mine, and we were flipping this house. And in 2007, the market started to get very fearful. Okay, people were losing their jobs. We'd already gone through a round of stimulus where everybody was handed a check to go blow on whatever big screen TV they wanted. And it was very hard to sell the house. The reason why is because inventory started to explode, and the more homes available for sale, the harder it was for us to sell it. And we got out by the shirt, with the shirt on our back, barely making it as the market just started to careen lower. In November of 2021, mortgages in forbearance fell to 1.67%. Now, to give you an idea of how big the situation was, this was in November of 2021, just a few months ago. This was according to the Mortgage Bankers Association. The peak was in May of 2020 at 8.5%. Okay, so it has fallen dramatically. And I'm going to give you some other numbers of the people that exited forbearance. It's really telling. Around 835,000 homeowners were in a forbearance plan nationwide. And then from June of 2020 to November of 2021, the share of owners exiting forbearance, they consisted of this. Now, this is very telling. First off, 30% of them exited with a loan payment deferral, which allowed them to just take those payments and essentially stack it onto the back end of the loan. 20% exited current on their payments. They were able to take the payments that they missed, put them on, make it current. 17% exited not current on their payments, just straight up, they are still not current, okay? We're gonna come back to that. 14% exited with a loan modification, and we all know that some of those loan modifications were horrible. Higher interest rates at 40 years, which means they're still actually paying more per month. 12% were reinstatements, and then 7% exited with payoff loans through either selling or financing. Now, guys, think about it. This is a big deal. The mortgage industry is going through some massive changes right now. We're seeing some changes that are huge because we're seeing higher interest rates. The Fed is threatening more interest rate hikes, and we're seeing more and more daily issues with the fact that people are becoming more and more fearful of the economy. We have less and less jobs available because we're seeing a massive turn of events when it comes to AI and things like that. I mean, honestly, guys, the mortgage market is on fire right now, if you think about it, but not in the ways that you think. I mean, fire. Mortgage market's on fire. Inventory should see a boost soon from forbearance. Guys, I have a feeling that things are going to get a little hot. Construction declined in 2019 and 2020, but increased. Sorry, guys, get a little smoky in here. But increased in 2021. That means that new construction, we're going to see more new construction hitting the market, which is more inventory. So now you couple that with more forbearance issues, because some of these people, like the 17% that exited not current on their payments, those people are going to start to face the banks as they start to say, hey, if you don't do something, if you don't come current on these payments, we have started the foreclosure process. You know what? We're either going to kick you out, or at least you could sell your house. And I think we're going to see more and more of that. So guys, at this point, I really can't tell you what to do. I'm not a financial advisor. I'm not a financial professional. I'm a dude with a bro hawk and a dream that just uses cardboard. And right now, quite frankly, I just smell warm pizza. With that being said, guys, the Economic Ninja is out.